Now that we're up to selling inventory on credit, we're going to have to deal with something called a discount expense. So what is that? Discount expense is a discount given by our business to an account receivable or customer who pays back their account early within the credit terms offered. And this is going to represent an expense to our business. Let's have a look at an invoice. So it says Cool Cardigans applies a markup of 100% on all sales of inventory. So we are Cool Cardigans. This is going to be a sales invoice for us. So what we can see is the seller or issuer's name is at the top. That's us. And the person that is buying or receiving this document is here, which is Sue Ellen Mishke. And we can see there's an invoice, so that means it's a credit sale. It's a tax invoice, which means it's got GST. It's got a date of the 7th of February. We can see the products. We've got some SKUs, a quantity, item number, and an amount. And then we've got a subtotal, $700 plus GST, and that equals a total of $770. And we can see here we've got these terms, 2-14 and 28, and they refer to our credit and our discount terms. So what happened in this transaction? Well, basically we could say Cool Cardigans, which is us, made a credit sale of inventory for $700 plus $70 GST to Sue Ellen Mishke on the 7th of February. The cost of the sale was $350. Now we can't actually tell that from the document, and the reason we can't tell is because in the real world, businesses don't want customers to know how much stuff costs. We don't want the customer to know how much these cardigans cost. So the only way we could do that was we were told earlier that this business applies 100% markup. So if the sale was for $700, the cost of sale must be $350. And the source document was invoice CC 101, which we got here. But what are the credit terms? So it says here 2-14 and 28. What that means is the customer Sue Ellen Mishke will get a discount of 2% if she pays this invoice within 14 days. So if she bought on the 7th, 14 days would be by the 21st of February. And if she pays within that time, she'll get 2% off her invoice. But overall, she's got a total of 28 days to pay this invoice, and that would be the 7th of March. So if we look at that as on a timeline, we could say day 0, which was the 7th of February, that's the day we made the credit sale. 14 days later, which would be the 21st of February, if she pays that any time between here and here, up to and including the 21st of February, she'll get a 2% discount. But if she doesn't do that, then the N28 means she's got 28 days from the day of purchase, which was the 7th of February, to now go and pay the entire account, in this case, which would be the 7th of March. What we need to do now is how do we figure out the discount amount? So we know it's 2%, but 2% of what? Well, there's two ways we could do this. We could say it's 2%, the discount is just on the sale only, excluding the GST. So that would be this amount here. So we could say the sale amount was $700. The discount is going to be 2%. So therefore, the discount expense that we're going to give is $700 times 2%, which is $14. So that's one way to do it. We calculate the discount on the sale only and exclude the GST. The other way we could do it is we could do approach number 2, calculate the discount on the total owing, including GST. So that would be this number here, which is $770. So if we were going to do that one, we'd say the total owing was $770. The discount percentage is 2. So the discount amount would be $770 times 2%, and that is a total of $15.40. So in the real world, different businesses do different things, but in our course, which one of these is right? Well, VCA's very clear, and they say it's the one on the right. So we are always, without exception, going to apply a discount on the total owing, this amount here, not just on the sale, which was this amount here. So in this case, 2% discount of $770 would be a discount of $15.40. So the rule for calculating discounts is the discount is given on the full amount owed by the account receivable, including GST. So just to look at some examples, we had a credit sale of 100 plus 10. The discount is 10%. So the discount would be 10% of 110 or $11. Now the other thing we need to calculate is then how much cash are we going to get from the account receivable. So if they owe 110 and we take out the $11 discount, we'll get $99 from them. So we're going to need the numbers in both of these columns. If we added a $440 invoice, including GST, with a 5% discount, that's 5% of $440 or $22. So the customer would pay $418. If we had a $1,500 sale plus GST and a 6% discount, that'd be 6% of $1,650, which is $99. And the cash received would be $1,650 less 99, which is $1,551, and so on. We can see these other examples, but the point being, it doesn't matter what the number is. We know we take the discount percentage and we add it, or we calculate that discount based on the total amount owing, which is this number here. This could be generally in accounting when you get a decimal, it's a good way to go. I might have made a mistake, but for this particular topic, you can expect decimals. Decimals might happen, so don't think that means you've got an error necessarily. So let's do an example from beginning to end of how this would all work. Let's record this transaction in the general journal. We're not going to do a narration because we've done it for sales before. Sale made on credit of 10 units to David Putty for $2,000 plus $200 GST on credit terms of 5-7, 5% discount within 7 days, net 30 days to pay. The cost of sale was $700 and the invoice was AU 78. So we're going to put that in the general journal. So just like always, we'll start with the date. We can do the debits and credits in any order. I'm going to start with the accounts receivable for David Putty. That is an asset. And after this, he's going to owe us more money. So that asset's going to go up, which would be a debit. And he will owe us $2,000 plus the GST for a total of $2,200. That'll match up with two credits. The first one will be to a ledger called sales, which is a revenue. And today, because we made a sale, that revenue's going up. And when revenues go up, that's a credit. And lastly, we'll have an account called GST clearing, which is a liability. We're charging this customer GST. So we learnt when we did GST, that means our liability called GST clearing goes up. And when a liability goes up, that would be a credit. And we've got one debit matched up with two credits. But we need to consider the cost of sale. To make this sale, we had to sacrifice some economic resources, and that represents itself in something called a cost of sale expense, and that is going up. So when an expense goes up, that's a debit. And the thing we actually had to give up today was inventory. We had to give inventory to the customer. So an asset called inventory went down. So when that happens, that's a credit. And that's a transaction we've been doing for some time. What is new now is that, well, we first of all got to put it in our ledger. So we just put it in here, our account receivable ledger. We've got the date, double reference, sales / GST clearing for $2,200. What is new now is, well, what happens when he pays it back within the credit terms? On April 22nd, David Putty settled the account in full and received a discount for prompt payment receipt 301. And what you can see here is that the question doesn't even say how much he paid. So with a question like this, you're meant to go, well, how many days was it from the 17th to the 22nd? That's 5. So he's paid that within 5 days. So he had 7. He had 7 days to get the discount. So he's going to get a discount of 5%. So you're expected to know that the original sale was $2,000 plus GST for a total of $2,200. Discount of 5%. He's going to get a discount of 5% of $2,200. That's $110. So therefore, how much is he going to pay us? Well, he owes $2,200. Let's take out the 110. He's going to pay us $2,090. So we're going to put that in our general journal. We'll start with the date. I'm going to start with the bank ledger. Bank is an asset, and today the business is getting more money. It's going to get this number here, $2,090. So that's an asset going up. So when an asset goes up, that's a debit. Now the thing that's new today is we're going to make an expense called discount expense, and it's going up. We're giving an expense today. So our expenses increase, and when they increase, that would be a debit. And lastly, his account, he did owe us $2,200, David Putty, but now the asset called accounts receivable is going down. And when an asset goes down, that's a credit. And what's happening is it's actually going down by the entire amount. He owes us $2,200 less in total. Why? Because he paid $2,090 and he was given a discounted expense of $110. If we get asked for a narration, always give too much information. David Putty settled the account with a 5% discount, and we've got receipt 301. Let's put that in his ledger. So he did owe us $2,200 here, and we just whack it there now. And we say on the 22nd of April, bank / discount expense decrease the account by 2,200, and just to show the person reading it that this ledger now balances to zero, we put the total on both sides. Don't forget to do that. There's actually a couple of ways we could have done that. We could have done the way we just did. We did this blue entry here, this credit, double reference. You can also split it over two lines if you wish. You could have done bank on one line for 2090 and discount expense on one line for 110. Either approach is fine. Obviously this one on the bottom takes a little more work, but for some people that logically makes more sense to do it like that. I like to keep it simple, so from now on I'm just going to do this double reference here. But I guess we need to consider, well, why is discount expense even an expense? We just said it is, but why? Well, if we ever get asked a question like that, we always just go back to our definition. And the definition of an expense is a decrease in assets or an increase in liabilities. It's got to overall decrease owner's equity, and it's got to be something other than a transaction relating to drawings by the owner. So let's have a look. Let's take this first thing. Here's our transaction here that we did in the general journal. Did an asset decrease? Let's have a look. So we've got one asset going down here, but one asset going up. Is that okay? Does that meet the definition? There's nothing to do with liability, so it's got nothing to do with that. So what we'd say here is there is a decrease in asset. There's a decrease in assets. Specifically, we need to relate it. The accounts receivable asset decreases here. We don't say bank because bank asset actually went up. So always remember to relate your answer. Also remember, when you're doing this, do not give the part of the definition that does not apply. So don't say this is a decrease in assets or an increase in liabilities. Liabilities have nothing to do with this, so you're not allowed to mention it. You just talk about the bit that does apply, which in this case was a decrease in assets. It's going to decrease owner's equity. Don't really need to relate that. What else can we say? And we can say it's got nothing to do with drawings by the owner. It's something that happens in the course of the ordinary activities of the business. It is not drawings. Giving discounts to customers encourages payment. It's just an ordinary thing that businesses do. It's not a transaction between the owner and the business like drawings. And maybe the last thing we might need to consider is was the impact of all of this on the accounting equation? And let's just do it line by line. Let's start with the first one. We had bank debit. That's an asset. And when an asset is debited, that means it increased here. We had an expense being debited. When an expense is debited, that means it increases. And where does that fit in our accounting equation? Well, when an expense goes up, it makes owner's equity go down. And lastly, we had an asset called accounts receivable with a credit. Well, that made a credit makes an asset go down. And that's everything. We just got to make sure this all balances. So from the asset side, we've got one asset going up 2,090, but another asset going down 2,200. So if you balance that out, that went down in total by 110. There was no effect on liabilities. And in owner's equity, it also went down 110. And we can see that balances. Assets, negative 110, equals liabilities, 0. Plus owner's equity, negative 110. And if we add these two numbers together, this side equals this side, and that means our accounting equation balances. And the last thing we need to consider is just some pros and cons of even offering a discount expense. So when we get discuss questions, considering either side of the argument. So we could argue on the one hand, there's some pros. The cashers receive faster from accounts receivable. They have an incentive to pay us faster so the business can use our cash that we get from them for other payments. It's a good way to increase sales because it will attract new customers and help keep existing customers as they are drawn to the discount offered. There's less risk of non-payment when we do a topic called bad debts. We need to look at people who just won't pay. So customers will be more likely to pay back our business than other businesses who don't offer discounts, which reduces the risk that they won't pay their accounts. And lastly, when we look at something called accounts receivable turnover and accounts payable turnover, they've got this relationship where they can put pressure on each other. And when we're offering discounts and getting paid faster, this creates less accounts payable pressure because we have more time to pay them back for the stock that was sold from the cash we got from selling the inventory itself. Well, what are the arguments or the negatives of offering discounts to customers? By definition, by giving a customer a discount, we're accepting less cash from the account receivable. So we're ultimately sacrificing cash. We also saw that it's an expense, so therefore an expense will decrease net profit. There'll be probably a reduction in cash sales. When you think about it, if a customer came in today and they know that we offer credit sales, what incentive do they have to pay today with cash? And we'd actually prefer cash sales because cash sales, we get the money immediately. So in terms of being able to discuss this, that's a lot of pros and cons. We probably wouldn't need that many. It's important to read the list though, just because we can then have a considered discussion or a debate in our responses, and that'll be able to enable you to achieve the higher marks for those difficult discuss questions.